Hey y'all, welcome back. It is March. It is time to do a market update. And there's a lot going on in the world right now, to say the least. But there's some interesting, maybe resilience is the word that I'll go over in this video. So stay tuned. We're going to go over rates, we're going to go over inventory, and then we're going to go over the market as a whole. So let's get started with interest rates. Usually, when a war starts, interest rates actually go up quite a bit more, especially when the price of gas goes up the way that it has been, the price of oil. And we have seen interest rates come up just a little bit. Not too much, though. They've been on a steady decline, down below 6% in a lot of cases recently. They bipped back up a little bit, but not as much as would be expected. We also had a pretty terrible jobs report. Unemployment is floating upwards of the 4.5% range. That 5% unemployment range is really going to give the feds some hard data to look at to make some decisions about. So all that to be said, interest rates are relatively steady. Despite what's going on, despite the inflation that potentially could be coming down the pipeline, I think that we're still going to have a really good year for interest rates. So that's something to keep an eye out for. Everybody's predicting that it'll be a better year for interest rates. So we're holding out for that. As we know, also, we go down and we look at inventory, we look at real estate, and it has these 3-year ebb and flows. 6-year cycles is what they call them, of up and down, sometimes more radical than others. Right now, what we're seeing in the Treasure Valley area is a really early spring market. Sellers have not totally gotten ready to get their homes on the market, so we don't have an influx of new inventory, but the buyers are coming in hot. We have seen pendings come up significantly. The pending to active ratio is about 80%. When we see that get closer to 90%, we know we're in a more of a seller's market. So right now, what we're seeing hands on deck is that there are multiple offer scenarios. Buyers are out there. They're having to compete right now. So if you are a seller and you are waiting on the sidelines, look at the weather. It's beautiful. Put your house on the market. Trust me. And lastly, I want to talk about home prices over time. So I alluded a little bit to this 6-year cycle, which really is usually 3 years of somewhat of a slow market and 3 years of a little bit more of a fast market. The last 3 years, we have had record low home sales in the United States, about 4.1 million home sales for the last 3 years, which is incredibly low if you look at these numbers over time. And so with 3 years of record low numbers, we may have built up a pent-up demand that we're going to start seeing jump into the market now. So predictions are that this year we'll have about 200,000 more home sales in the United States. So from 4.1 million last year to potentially 4.3 million this year. What we also saw in the last 3 years was sort of a flat line on appreciation. The natural appreciation of a home year over year is about 4%. The graph I have in here for you is really interesting. Obviously, 4% is not exactly what happens every year. There are market highs, significant lows, and bounce backs. But if you look at over time, if you hold your home long enough, you are pretty much guaranteed to get about 4% appreciation year over year. These last 3 years have been a little lower than that, averaging at about 2.4%. And so with the record low home sales and appreciation sort of staying flat, we've created a little bit more of a balanced market after that the COVID sort of boom. So what I'm seeing and what we're all anticipating this year is potentially for the market to start to crawl its way out from that sort of bottom that we've been in. If you are waiting to get into the market as a first-time home buyer, don't wait much longer. I mean, especially with what we're seeing right now in the spring inventory, get out there, get approved, get into this market before it gets too expensive for you. Also, if you're an investor, same thing. Think about your portfolio right now, what you could offload and maybe purchase instead so that you can potentially maximize your ROI, your return on investment. All things to say, I'm actually really excited for this year. I've seen a really nice, I guess the way to put it is a nice influx of interest in real estate just at the beginning of this year. It's good to see people letting the news sort of fade to the background and focusing on their local areas. We have a fantastic community here in the Treasure Valley. Our job numbers look pretty good relative to the nation. It's a beautiful place to live. So if you're thinking about it and you're not quite ready or not quite sure what to do yet, give me a call. I think we should talk. I'll see you guys on the next one.